Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 50 of the Forex market review. Today we're going to take a look at a few trades setting up. And the reason why we're looking at a few trades is because personally I will be closing down at the end of this week and I will not be trading for 4 weeks. Christmas and the New Year's time to spend with family and friends, and hopefully you've made enough during the year to give you this time off. The markets are always very slow during this session period, so any movement is made on low liquidity, and therefore it's not very wise to follow the trading plan if it's not based on normal scenario conditions. So therefore this will probably be my last video for the next 4 weeks. So I want to get a few trades coming up, and if you would like to take them, that's up to you. And personally, if I get an entry before the end of the week, I will take it. Other than that, I will be staying out of the market. So without any ado, let's jump straight to those charts. So the first chart we're going to look at today is the pound New Zealand dollar. And the reason why we're looking at this one is because early in the week I sent out a notification advising that this looks like a potential setup for a short position. So here we have the weekly chart. We have this large move down here, which is wave 3. We have our push back up. So it's likely it's going to come back down and then bounce back up again for a pullback for wave 4. So we're looking at a small opportunity on the way down. On the daily time frame, we can see it's had what looks almost to be 5-wave pattern. This could be classed as all of wave 3, going up, coming back down for 4. But personally, I think this is probably 3 here, up for 4, down for 5. So we're going to see this 1, 2, and back up again. So looking for this pullback down. But before we can take the trade, first thing we need to do based on the rules is look at for our divergence. This is where we're going to see the higher high in price, but we're going to see our lower AO. And it's clear divergence because it's come back below the line before going back up again. Now you might say, isn't there divergence right here? Yes, it is. Definitely still divergence here because it's come back below the line before making the lower low. But it's also still continuation divergence looking at these 2 points here as well. We're now finding some support on this 200 EMA line, and you can see for the last couple of days it's been bouncing on it, trying to break through. So we want to see it break through and probably looking at testing these areas around here. Dropping down to the 1 hour chart, we can see what appears to be a 1, 2, and down for 3. And back up for 4. So based on that, we would have grabbed our Fibonacci retracement tool, go from the lows, our highs to the lows, want a minimum of 38.2% pullback. It's done that. It's hit its 200 EMA line on the 1 hour chart. So therefore, once it's broken down through that, you'd be looking at an entry here. If you wanted to type stop losses, you probably would have put about 100 pips stop loss. And you'd want to be looking at maybe moving to break even around here of 100 to 125 pips. It hasn't got there just yet, so you're still technically in the trade. But if you want to be conservative like I am, you might want to be going back up here around 200 to 300 pips. And you'd be looking at moving to break even once it's broken these lows down here. And definitely before these lows here. Where do we think it's going to go? Well, once we've entered on our pullback, we use our Fibonacci Expansion tool. Go from the start to the end of wave 3 and back up to wave 4. So this movement is its wave 4, A, B, C. Even though you've entered here, it's made a new high before you've come down to these lows. So you definitely would class this as the point. Definitely want to be moving to break even before this point here. And then you'd be looking at getting around down here. So if we did enter on that market there, using about a 200 pip stop loss, down to here you can make your 400 pips, so you can make your 1 for 2. And being aggressive, using the 100 pip stop loss, which is still in the trade, you'd be looking at your 1 for 2 at this first place, where I'd be considering break even. And if you want to push it even lower, you can go down to these levels down here, but definitely getting out before this DSR zone all the way down here. So that's the current trade that we're in, and a couple trades coming up. We have the USO USD, which is an oil trade. You can see on the weekly chart it's pushed back higher, and we're starting to see these highs on the stochastic being reached. It's very likely it could want to push back up to this weekly 200 EMA line, but in the meantime it's probably want to push back lower. So we've seen it break this DSR zone, break to new highs. That's now going to be as a support area. What we want to do first is see our divergence, higher high in price with our lower AO. So now that we have that, we want to look at a selling opportunity. On our 1 hour chart, we have the same. We still have our higher high in price, and we have our lower AO on that time frame as well, which is very good to know. What's going to see is probably it's going to come down, test this 1 hour support level and push back higher. If it does, you could look for a selling opportunity, probably risking around 250 to 300 pips. Definitely getting out before there, so we're looking around a 700 pip stop loss down there. So you can, if you can risk 250 pips, you can definitely make your 1 for 2 to down to those levels there. So first, let's see if it bounces off this 200 EMA line, or maybe it might push through and push back up again. Until that sort of confirms, it's just a trade setting up. Aussie USD is looking at another potential trade. Here we can see it's bouncing around, it's pushed down, it's pushed back up, it's hitting this daily 200 EMA line. So it's likely to find some resistance there. Based on the 4 hour chart, it's now showing divergence. This looks like 3, possible pullback for 4. So higher high in price with our lower AO. Do we have enough room if we class all of this as 3? Yep. That definitely has come back to the minimum 38.2, and it's 4 hour 200 EMA line. So you'd be looking at probably 120 pip stop loss, getting out before those lows down there, making probably a 1 to 1.5 risk to reward, unless you wanted a really tight stop loss. If you want to be conservative, then you'd be looking at a 250 to 300 pip stop loss, and you'd be riding it down to those levels down there. 1 hour chart is showing divergence as well. Personally, I'd like to see it come down, break this 1 hour 200 EMA line, come back, retest it. So once it's broken down, see it come back up, retest it, then look for a selling opportunity, probably risking about 100 pips, and definitely getting out before those lows down there. Where would we expect it to go? Well, using our Fibonacci Expansion tool, if that was the high, the low, and back up again, then that's saying also that 100% level is matching up with those lows as well. So you'd be looking to get out there, risking 1 to make almost 2 times. Worst case scenario, definitely before this daily DSR zone is where you want to be getting out. So if you were looking at a, 100 pip stop loss, you can make 150 down there. So I'd be looking at that going probably about a 75 pip stop loss, which would work great on this trade. But please use this to discretion and use your own trading plan and make your own stop losses. Do not just go off what I say. This is just for information only. But one thing I want to note is with the US dollar is that in the less than 24 hours, the US Fed will have an interest rate announcement. It's very highly likely that they will increase the interest rate. Now, all of this is already factored into the market by now. Everybody's expecting it. If they don't raise it, then the Aussie dollar is going to skyrocket as the US dollar tanks. But even if they do raise the US interest rates and they don't mention anything, they're very dovish on the announcement of how many they're going to raise in 2017, you're going to see the Aussie dollar rally. So that's why we want to see some weakness before we get in. and just be cautious that the Fed announcement could push this trade either way very quickly. Another one will be affected by the US Fed announcement is the USD yen. But if in this case we're shorting the Aussie and making a long the US dollar, but this one's shorting the US dollar. So depending which way the market go, one will deliver and one will likely not. But as long as your risk to reward is good, doesn't matter. A 50% win would still make money if the winning has doubled its profits. So here we got 1, 2, 3 coming back for 4. Likely it could push back lower with the stochastic now overbought. On the daily time frame with 1, 2, 3, so we're looking for probably a pullback for wave 4 down to these levels here. It's probably going to stop around this DSR zone round about there. Let me go ahead and just drop a line in for future reference. And on our 4-hour chart, we have our minimum requirement, which is our higher in price, and our lower AO, clear divergence, because it's now back below the line. So I'm expecting it to fall down to these levels here and bounce off this 200 EMA line as well. Where can we think it could go? Well, if you're risking around 150 pips, you're definitely going to make your 1 for 2 down to those levels down here. On our 1-hour chart, we have our divergence as well. Lower AO, higher price, which is great. So we really want to see this push back lower past this 200 EMA on the 1-hour chart with a bit of a retracement back up. If we can see that, then definitely would be looking like an entry there, risking 1 to make double our money. Again, once we're in the trade, we can just use our Fibonacci Expansion tool, lows to the highs, and then these are the levels you want to be looking at getting out, with the 127 matching up with that daily DSR zone right there. So definitely wouldn't want to push it any lower than that. Our last trade we're going to look at is the ASX 200. This trade is very similar to the US 30 as well. It's a stock market trade, and we're starting to see some resistance come up around this DSR zone. So what we're going to see, higher in price and our lower AO. Looking at coming down to roughly these levels down here, but initially possibly around there. Drop down to the 1-hour chart. We can see our higher in price with our lower AO as well. Higher in price, lower AO. Expecting the market to push down to that first support area, hopefully push back up, looking at an entry and probably be making a 1-to-1 to that area down there, and definitely moving to break even and trying to push it even lower. But that's if you want to take a ASX 200 or US 30 is the same one, some type of share trade. And if this is to fall, then the US dollar yen trade will also likely fall, because as the weakness in the stock market causes strength in the yen. So thank you for that. That was week 50 of the Forex market review. Again, be cautious of the Fed announcement in less than 24 hours and follow your trading plans. There's quite a few trade setups. I rushed through them because I just want to point them all out. There's still a couple I didn't point out, but they just correlate with the ones I've shown. And just look at those trades, and if they meet your criteria, then by all means take the trade. But I hope everybody gets to have a good Christmas, New Year, and takes the time off with their family and friends. Here at Sane Investment Solutions, we wish you all the best in your success, a great 2016 and an even better 2017. Bye-bye now.